Hi everyone, Steve Colman here with Colman and Villaplana. I brought my friend Joel Colman from ASCP Mortgage with us to discuss today the difference between mortgage bankers and mortgage brokers. Joel, how you doing today?
Good, Steve. How are you today?
I can't complain. Joel and I serve on the board for the National Hispanic Association of Realtors, so I know Joe really well. We've also done a lot of business together. And Joe, this question is something that I get a lot, and myself, I want it to be better positioned to answer.
Okay.
So, can you explain the difference, first off, between a mortgage banker and a mortgage broker?
Sure. The difference between a licensed mortgage broker and a licensed mortgage banker is a banker usually works for one institution, one lending institution, and when they're working with their bank, and we're working with clients, their job is to try to qualify them for whatever loan programs that one lending institution provides them. A broker is licensed with the state that they're licensed in, whichever state they happen to be doing business with, and they have the ability to work with different lenders because they're not tied into just one financial institution. So what that means for the consumer is the broker can act more like an agent and shop around their deals for them, give an opportunity to check out different banks and different lenders to see who can give them more favorable terms or different opportunities depending on what kind of lending they're looking to do.
Okay. All right. So is there a downfall to using a broker compared to a lender?
No, there is no difference as far as the consumer is taught. Both compensation usually comes from the lending institution. Whether if you're a mortgage broker, it'll be with the lending institution you're doing business with. Once you get to that client and you actually have the established and have finally had the funding and closing, so they're getting paid the same way that a loan officer from the lending institution usually gets paid, which is directly through the rate and is something that is already part of the compensation where the consumer is not paying anything extra for. For there is no downside, and honestly, I feel the more educated a consumer is, the more likelihood they are to work with a broker.
So going other than
Especially here locally in New York, honestly.
Yeah?
Yeah.
So I just want to reiterate that. So basically, a loan officer at one of our big banks or one of the smaller loan companies versus your being a mortgage broker, you guys all going to get paid the same, pretty much on the same loan.
Correct. We get loan officers, loan originators, or let me use a technical term.
Okay.
Mortgage loan originators, licensed mortgage loan originators are compensated by the volume of the loan. In other words, the size of the loan. So if the loan is $300,000, that's what they're going to get paid on, versus a loan being $250,000. That's where the compensation will be different. But as far as loan volume itself goes, as far as pricing goes, and what the consumer is looking at, and how people are compensated, and this is what's in the laws, it is based basically on the volume. So you're doing a $500,000 loan, whether it be a Freddie Mac, an FHA, whether it be with Chase, whether it be with Bank of America, whether it be with a small institution, regional, the compensation is based on the loan size, nothing else.
All right. So my personal experience, I've had situations as a bank attorney myself where I'm cutting out a broker a check, and there's sometimes I'm not cutting out a broker a check. What's the difference there? And again, is the same true with what you just said?
It's still true. What the difference there is that as a broker, I have the ability, and depending on the situation, some people prefer to do this. They do what they call borrower paid compensation. So what they're doing is, instead of the lending institution compensating me for the client I'm putting them in contact with and providing them the servicing, the loan servicing, the funding, the client is paying me directly. Okay, and that's being offset by giving them a lower interest rate from the lending institution, because the lending institution is no longer my part of the compensation plan when it comes to pricing out that loan. So they get to pay for it out of pocket, and that's fine. Some people prefer to do that depending on what their situation happens to be and how they write off the taxes and those other things, which honestly, you're more a tax preparer, Steven. You can talk much more about that than I can, but those are reasons people can do it, or depending on what kind of loan program they're doing. An investment property is treated obviously differently than a primary home versus a multifamily home. So there are times that people do that, but for the normal course of business, honestly, most people don't do that, especially with the audience that we're usually dealing with, what I call our bread and butter, our first-time home buyers, maybe buying something a little bit bigger than from the first home. Most people just do lender-paid compensation, and that's what everybody's really used to. So for the consumer, they're not going to see any additional fees at all.
And if they did what you're doing,
and by the way, excuse me, I just want to clarify before we continue. It's not really an additional cost when you pay a broker fee because it's being offset usually by having a lower interest rate. So it's almost like buying a discount point.
That's exactly what I was just going to ask you.
Right, that's what I was going to say to you. So, so when you're looking at, when you're looking at your LE, the loan estimate, when you're looking at your closing disclosure, the line items and numbers may be broken out differently. But when you look at the end of the day, which is what we call the cash at close, which is a down payment and the closing costs we need, it should be either similar or lower than what you're looking at versus a lender paid compensation.
All right, so just to again clarify for our audience that do not speak loanese, if they
right, a lot of jargon there. Yes,
you can sometimes what's called buying down your rate, or buying down points. Sometimes you can take a percentage of your loan and pay that, and that will lower your interest rate. So what Joel was just saying is that is what happens when they're doing the broker compensation direct by the buyer,
correct,
or the borrower.
Correct, the borrower, correct.
Oh, interesting.
Correct.
Okay,
yes,
so I learned something new today. That was pretty interesting.
That's interesting. And again, depending on the real estate deal, there are times that as a tax preparer, you may recommend that because you're going to see tax savings somewhere down the line based on that their personal situation. You know what I mean? So that's when I see it happens. But usually with investment properties, I rarely see it, like I said, on our normal primary home purchases or refinances.
Right, and Joel's correct. You can. Besides your per diem interest that you pay at the closing, you're able to write off origination fees, broker's commission, etc. So that is a huge tax saving, especially if someone's buying in the middle of the year, where then I can get the full benefit of the full year.
Okay.
So that is a helpful thing. One other question I do want to ask: I've had clients denied by one bank, then me beg and plead and work out agreements with a sales attorney to extend the contract, and another bank approve it. I haven't typically had that with brokers, and can you just clarify why?
Sure, and this is the reason why I'm a broker now when I used to be a banker before. So one thing that I mentioned before is when you're a loan officer or a mortgage banker, you're working for one lending financing institution. That means that the guidelines for the loan to be approved has to be approved by that financial institution. What most people may or may not know is that every lending institution, besides having what we call the general government guidelines, which is what a Fannie Mae loan may look like, or a Freddie Mac loan may look like, or FHA, which have different underwriting credit guidelines, different lending institutions may have their own guidelines on top of that. The guidelines are given to us by the government are usually what we call baseline. Meaning that they're basically the bottom of the floor. It is the bare minimum they will take to accept a loan that's being sold to them, which is what we normally see being advertised on TV when we see those great interest rates. These are the loans they're normally talking about. But beyond that baseline, sometimes a bank or lending institution may not feel comfortable writing that. And let me explain to you a little bit better. So if we're doing an FHA loan, FHA guidelines may say that the minimum FICO score is 550. But a lending institution may say, I don't feel comfortable lending to anybody with a credit score that low. So for me to approve this FHA loan through my financial institution, the minimum FICO score has to be 620. Okay, so we're not going to do any loans between 550 and 620, even if they are FHA approved eligible. We're just not going to touch them because that's not our cup of tea. We don't work well in that inkwell, or however you want to describe that situation. So, but there are other lending institutions that turn around and say, you know what, that's fine. We'll take that all day long. We've been doing loans with FHA for many, many years, and we see people from 550 to 620, their loans perform just as well as anybody else. We feel very comfortable doing it, so we're willing to take that loan. As a mortgage broker, I could take one deal from one lending institution that may have given me an issue because maybe I didn't do my homework properly and didn't miss that point, and then turn around and give it to a different lending institution that will approve that loan, even though the information provided to them is exactly the same, because their credit guidelines are different than the other lending institution. And that is why I love being a mortgage broker, because I have the ability to do that. So it's not just about shopping around for the best interest rate, not about shopping around just for the service, but it's also about being able to find those niches when you need to help people that need that help in order to be able to buy a property. Sometimes people, FICO scores go low because of a one-time event. It's not something that it was, something that's habitual with them, or just, they lost their job. Let's talk about COVID. COVID pandemic happened, different things that different lending institutions have responded to differently. So as a broker, I can pick and choose depending on a personal situation. See, hey, you know what? These are the 1 or 2 lending institutions that will work with you. Let me present you the information, and if this makes sense, then we go forward. And that's why I love being a broker, because when I was a banker before, and I was a banker till the financial crisis happened in 2008, I ran into the same issue where, once my lending institution decided it was not going to approve a particular type of loan that was approving all day long before, then how do you deal with that?
So very interesting. I have one other question, and I may have more, because the more that you speak, the more that I end up learning, and I want to ask questions. I've had clients, from customer service point of view, say, you know what, Steve, we got denied. And I hear that the seller's willing to let us go to another bank, but I don't want to go through the whole process again. I don't want to deal with that. From what it sounds like, you can kind of circumvent that, because it looks like they apply to you once, but they have many different options in front of their plate.
Correct. They can circumvent to a certain extent. Every deal is individual and different, so I can't sit here and say this is a template guideline, but certain things usually can be transferred over. Appraisal reports, for example. Sometimes there's only an appraisal desk review fee, which is another $125 or whatever, but it's still better spending another $500 or $600 and getting a new appraisal done. Not just because of the fee of the cost, but also just getting another appraisal done. So these are things that you can avoid, for example, when you're working with a broker, because we can take things like that. The credit report, for example, we don't always have to rerun it, depending what the time frame is. You know what I mean? So something else we can save cost and time and money on. And then also the documentation that the borrower has already provided to us, if it's still current, meaning within whatever the time frame happens to be for the underwriter to review, 30 days, 60 days, we can still take that documentation and just transfer it over. So it does save time, and it gives the ability to minimize costs. And even though it can be still a little bit of a time delay, we can still minimize that time delay, because we're usually not resubmitting a whole new application. Okay. So those two things usually can make a big difference, especially when by the time usually come to you, Steve, like you mentioned, they already got denied by somebody. The seller's already waiting for them. Time advances might be coming down as a conversation in a minute or two. People already put the down payment money down, so now they're worried about what's going to happen with that. The fees that I already have paid for my appraisal fee, for my title fees or anything else. Are those things that now I have to pay for all over again? Or are these things that can be reutilized? So a lot of those things we can reutilize as a broker. And that's, again, something else that I like about having the flexibility and saying, you know what, it didn't work out here for whatever particular reason. Maybe it was something in my control, maybe it wasn't. But now I identify what the issue is, and we figured a way to work around. Now we just have to send it over here, and we can get this approved and taken care of.
Oh, great. Well, I've learned a lot. Hopefully you guys have. Thank you, Joel, for coming out and helping us educate our prospective clients out there. For those of you who want to ask Joel any more questions, or myself, our contact information will be coming up shortly. Thank you. Hope you're enjoying the videos that you've watched today. They're not meant to be a substitution for speaking with your legal professional, but just an educational tool. Thank you.